How's it going, everyone? It's Sam. We are looking at the president's taxes because it just came out over the last few days, his last couple tax returns. Now, some of this has been thought about in the past. A lot of people had theories on why he didn't release his taxes, but now we have a much better idea. So I took screenshots because it's such a long article. If you want to see the full thing, you can go to the New York Times and take a look at it. It's just from a couple days ago. And I want to be clear of something right up front, that this is not a political debate. I don't want to hear people, arguing about this in the comments, but I want to talk about the president's taxes, what he did, and how you can take advantage too legally of the tax system in the US. So we're going to go through what he's doing exactly to protect himself from taxes. So you can take a look at this online. Long concealed records show Trump's chronic losses and years of tax avoidance. So first of all, it says right up front, he paid $750 in federal taxes the year that he won the presidency. And the first year in the White House, he paid another $750. So right there, he paid about $1,500. That is multiples less than I made on about a $40,000 a year income. And it's quite amazing because how we have it set up in the US is we definitely have rewards for people that are willing to try to follow the tax rules, try to decrease their taxable income by doing what the government wants. And we'll talk about that more later. But he paid no income taxes at all in 10 of the previous 15 years. That's amazing. He is someone that, when you look him up, he's got about $4 billion net worth, and he's paying zero taxes. So that is quite amazing. Now, one thing that he's doing that you might not have the potential of doing is he has $750 in taxes in the US in 2017. He has a lot of his money overseas. So he paid about $16,000 in taxes from Panama, and then about $145,000 in India and $157,000 in the Philippines. So he has a lot of his companies, a lot of his business overseas, a lot of his money is overseas, so that way he gets taxed at a lower rate. Now, you probably don't have access to that. Like I don't. I mean, there might be workarounds, but it's a lot easier for someone with a high net worth to be able to move assets like that. But there are some things coming up that you'll be able to follow a little bit easier. Now, before we get any further, if you don't mind hitting the thumbs up on this, I really appreciate it. Also, if you haven't already hit subscribe, I really appreciate it. We talk mostly about stocks in this channel and investing, but we talk about different things too. It's a fun channel, do daily content. Also, if you want 2 free stocks with WeBull, there's a link down there. You have until September 30 to get 2 free stocks worth up to $1,600. After September 30, there's only 1 free stock worth up to $1,600. So check that out. So as we continue to go through, after tabulating his losses and his profits a couple years ago, they came out to zero income. And how is he doing this? Well, they go through a very long line of how he's doing this, but essentially, everything that he's making, he's also writing off in a loss somehow. So whether it's a depreciation on a property or it's some very aggressive investment that doesn't pay off, what he's doing is he's taking advantage of the system, using depreciation on rental real estate, and also just buying more properties, having business expenses, having write-offs, having losses to offset all the profit that he's making. Now, this is not illegal. This is what the government kind of makes us want to do, in that there are essentially a couple different ways to cut down on taxes, but Trump is doing some of this by moving his money overseas, and then also the other majority of the way that he's writing off his taxes is by losses and depreciation. Now, again, this is a very long article, but what they're saying here is that Mr. Trump's finances are using the proceeds of his celebrity to purchase and prop up risky businesses, then wielding their losses to avoid taxes. So that is really what he's doing. They have about 30 or so pages just to say that. Essentially, he's being very aggressive in some businesses, using his fame to prop them up. If they don't do well, then, he can use them as write-offs. If they do really well, then, he has to find some other way to depreciate. But what you can do is, if you own a lot of real estate, you can depreciate it over a certain number of years. You can aggressively depreciate it depending on, how good your accountants are and, what you can work out. But he's been able to write off, so he basically pays no taxes. Now, how can you take advantage of the tax system like the 1%? And you have some different options. So essentially, there are 3 main ways that I see normal people being able to take advantage of the tax system and not have to pay taxes. One is to invest in accounts that are pre-tax. So think about your 401k, think about your IRA, think about your HSA. Those are ways that you can invest before taxes, take advantage of our tax system, because really, this is one of the best things I ever heard, that the government is setting in place these rules to guide you to what they want you to do. So it's not taking advantage a lot of the time and maybe more with the billionaires, they are taking advantage of, different people that are lobbying for them to get these kinds of access to depreciation and all these different rules that affect them more than the rest of us. But the rest of the time, the government tries to lean you into what they want you to do. So what do they want you to do? They want you to spend, they want you to buy real estate, and they want you to invest in stocks. So they offer these 401ks so that you can, invest in American companies and grow your wealth. Another thing you can do is buy rental real estate. So they want you to own real estate and be able to provide housing if you have lots of money. So you can depreciate that over time. You can have tax write-offs on that. So that's a great way of being able to write off some of your income. The third way is by business expenses. They want you to expand. If you lose money, they're willing to have that as a write-off against your other businesses. So you continue to try to grow. So those are the three main ways. Invest in stocks, invest in real estate, and invest in your business. That's all they want. Now, for the W-2 employee that doesn't make enough money to invest a lot, but maybe they make just enough that they aren't in a lower tax bracket, those are the people that really get screwed over in our tax system. But just for reference, if you look through the different ways that you can lower your taxable income, the standard deduction is $12,400 in 2020. You can also, contribute about $19,500 to your 401k. You can also contribute $3,500 to your HSA if you have one of those. You can also contribute $6,000 to a traditional IRA. So there are a lot of options. You can bring down your taxable income by $29,000 just as a single person with your investments, then another $12,400 just for the standard deduction. Between a family, you can bring it down about $75,000 to $80,000 without having any kids if you just max out those accounts that I talked about. So let me know your thoughts below. I would appreciate it. Let me know how you're writing off taxes. I think that's really interesting, trying to find out ways to pay less taxes. Now, of course, I just, as an investor, I like to not pay taxes, but I understand that there is some benefit in paying some amount of taxes. It's kind of that system where if everyone pays a little bit, we have a better community, a better culture. So I know that, people's opinions vary a lot on this. So try to be nice in the comments, but let me know your thoughts below. I appreciate it, and I will see you in the next video. Thanks for using those links down there and hitting the like button. Bye.